For those of you that are looking for safe, conservative returns, because clearly we're not seeing growth at all in the U.S. markets. I mean, the S&P 500 and the Dow Jones are down an average of a little more than 1%, negative 1% year to date. I think that to get growth, you look north to Canada. Now, Canadian stocks, they're not going to make you rich. I mean, this isn't some kind of Ponzi scheme. This isn't some kind of get rich scheme. But I think their markets have less pressure, have less downside technical pressure. So I think that there's an opportunity here. Plus, when you look at the Canadian markets, they've had a pretty bad year in 2015. And I think a lot of that has been due to the commodity shock, the energy crisis, the energy shock. I think a lot of companies were unprepared. Canadian companies were unprepared for how long this deflation would last. And so they took a beating in 2015. And mind you, the Canadian stocks are, broadly, they're a pretty diverse economy, but you have to admit that it is levered more heavily towards energy, towards commodities. So they took a beating in 2015. I think that's an opportunity in 2016 because they're going to, Canadian investors, the Canadian economy, they're going to look for a rebound. I mean, the economy is a political issue as well. So there's going to be a lot of good pressure to try to buoy Canadian stocks, the Canadian financial markets broadly. So I like that aspect of it. I also like the aspect that the energy markets are starting to at least come back in the near term. Who knows how long that will last? But, I do like that. Even more, I like the fact that the precious metals complex and the base metals complex are also starting to make a comeback. You see some good, strong moves in gold over the last couple of months, especially in silver. Canada is a big-time producer of silver, and as well the base metals, copper, has been making some strong moves. So I like especially that the metals are moving higher, and I think the precious metals should move higher, especially in this environment of economic uncertainty. There are two Canadian companies that I think could do well. One of them is called Dominion Diamond Corporation, and this is as you can tell from the title of the company, it's a diamond miner. Now, when you think about diamonds, obviously you think about the diamond cartel that is perpetuated by the De Beers Corporation. But Canada, surprisingly, they also mine a significant amount of diamonds. They don't, De Beers, they don't have a total monopoly on the diamond supply. So if you wanted to get a little sexy here, I think that diamonds could be a underappreciated and undervalued opportunity. I think DDC stock, might be one of those stocks that surprises Wall Street simply because not too many people are paying attention to it. I like the fact that the Canadian economy, there's some metrics and gauges that show that the Canadian market in February, the economy and consumer sentiment looks to be improving. But with diamonds, you're obviously talking more about a higher end clientele. Plus, you do have wedding season coming up. So that could potentially be a fundamental boost to DDC stock. Now, the other company I wanted to talk about is Toronto Dominion Bank, ticker symbol TD. They're mostly known here in America as TD Ameritrade, but their stock, I really love TD stock in comparison to the other financial and banking stocks that are available, because unlike the major US banks, TD Ameritrade, even though it's a pretty big outfit, it's definitely smaller than, say, your Bank of America or your JP Morgan. And those stocks, JP Morgan, Bank of America, they've been absolutely horrible this year, and horrible over the past few months. TD stock, however, is significantly up. Plus, they offer much more generous dividend yields than many major U.S. banks. So that right there, I think, is a big selling point. You got performance in the financial markets, plus you have some passive income opportunities here that are much more generous than what the American counterparts are giving you. So bottom line, you see growth across the board in Canadian markets and Canadian stocks. I think it's a good idea to look into it. I'm not saying, once again, I'm not saying that you're going to get rich on Canadian stocks, but making 5%, 6% over the course of 3 or 4 months is a hell of a lot better than making 0% or even minus 1%.